suppose in terms of the perspective of someone who was an economist at the PBOC, what is the signalling that's being sent here by these moves, both by the LPR move and also the messaging that we're getting from key state media?
I would say the loan prime rate cut yesterday, together with the RRR cut a few weeks ago, is a clear signal that China's policy is turning, and the priority is to stabilizing growth. So that is quite a clear message also from the Central Economic Work Conference, I think held early this month. And the conference identified three major challenges facing China's economy: the shrinking demand, the supply shock, and weakening of expectation. In my view, in response to the increasing downside risk to the economy, stabilizing expectation holds a key. And the Central Economic Work Conference is the first step in that direction by emphasizing that growth stability is a priority in the run-up to the 20th Party Congress next year. And in that respect, I would expect the government to set a minimum growth target of about 5% or above 5% for 2022, and urge the local government officials to shoulder the responsibility to stabilize the growth, and then to adopt the macro policy, structural and regulatory policy to achieve that target. For example, we have already seen some fine-tuning in the pace and the intensity of the regulatory policy, including for the property sector, and also more importantly is for the macro policy. And the monetary policy already takes some steps, but I would say the fiscal policy is likely to do the heavy lifting based on what is in the Central Economic Work Conference. And we should expect a bigger budget deficit compared with 2021, and also with more tax cut, fee cut.
This pro-growth pivot, this feels like a familiar refrain, right? This is a playbook that we've seen before. Does this mean that deleveraging, all of the structural reforms are now really, on the back burner if what we're going for is a year of stabilization and pro-growth?
I would say the purpose is to defend the bottom line instead of to go back to the old model to boost the economy to the above potential level. The bottom line, in my view, one is to keep the growth in a reasonable range to prevent the growth from falling below 5% in a very important political year. And another bottom line is to to reduce the contagion risk and I think the systemic financial risk. So I would say the policy easing would not be excessive. It's just to defend the bottom line. And in particular for the property sector, I think the central government still emphasize that housing is for living, not for speculation. And that, I would say, I think the property tightening is not only intended to deleverage the property developers, but also related to China's long-term objective, for example, innovation, decarbonization, and a common prosperity. The government will continue to want to direct the resources away from the over-invested industries like property sector, and also property sector tend to be carbon heavy. And for example, to consider introducing the property tax to reduce the income disparity.
Another part to the growth equation is consumption, right? So to your point, you can manage it through investments and the other part that's been missing this year has been consumption. Your outlook on the consumption recovery next year, and what do you think they're going to do about the COVID zero strategy?
I do not expect a quick change to the stringent COVID control measures, not before the Winter Olympics. I think also the National People's Congress in March. But I think the priority for the government seems to be to create sufficient jobs by increasing investment, in particular in the infrastructure investment, and I think the budget is likely to emphasize front-loading and increase of fiscal spending by, I think, resume the infrastructure investment, and also by stabilizing the property investment. That will help to create a stable labor market with wage increase, and that would be, I think, help to stabilize the consumption.
In terms of infrastructure investment, then, let's talk about capital stock. Where does China need to put that money to use?
I think there are still a lot of areas for China to invest. I think this is the first year of China's 14th five-year plan, and the NDRC has put in place a lot of projects, I think, in the pipeline, including the traditional infrastructure project, roads, airports, but also the so-called new infrastructure intended to promote China's homegrown technology, for example, the 5G, artificial intelligence, the biotech, and also the aerospace, those industries, and the semiconductor. So that is, I think, still a lot of areas to invest.